Here's William's question. Recently, I have noticed that on the market down days, the volume has been higher than average versus on market up days. The volume seems to be lower than average. For example, SPY in September. Here we go. There we go. All right, let me move this over to my other screen. Perfect. Let's give me a little bit better control. Good. Does the market sentiment indicator, we'll go back to that in a moment, take into effect volume on market down days versus volume on market up days? Well, this is actually an easier question than I thought. And the answer is no. Okay, it is looking at volume increases and decreases, the change in volume and the volume over that day, but it's not considering volume on an up day, it's a down day, as any kind of weighted measure, William. But in William's point, we can see it very simply right here. So that first, the fear, the drop, people getting out, people buying on the lows, orders getting triggered. Right? So you've got a lot of buy to close orders on short stock and things of that nature. The short sellers, you see those buy orders to cover are starting to get triggered. It's spiking the volume. This was a down day too, and the volume was still up. What is our lowest day? 15th and the 22nd at 14th and 15th. Well, we opened up and it came back down, but we ended pretty good. And then we were on our up day. Our next two up days, we're seeing some good volume there. Not too bad, but not quite at the low. Oh, no, I'm sorry. Jeez. Skewed view. Here's our low volume on the up day. My apologies. So yeah, we started to see the decline. We started to move up. There's a spike that we start to see a little bit increase when it pulls back. There's our increases again. Our little up day. There, a lower volume, and now we're keeping about steady. Okay, so the volumes to me, on these big 2 down movement days, William, absolutely. The volume was the highest in September, and they're big on the down days. But what's more important to the market sentiment, not necessarily weighted to it, but it's the number of days SPY is down, the number of days and range it's below, it's the 20-day moving average, or the RSI even. Those are some of the indicators that are looked at, or the MACD gap, for example, positive or negative. Then we moved back up, but the MACD gap stayed pretty big, so I think it stayed near a bearish structure there as well. Okay, and so in that case, that's what we're looking for. I mean, that's what it's there, but it's not weighting. The market sentiment tool is not weighting high volume and volume spikes based on an up or down day. In defense of that, what I can say is that on the 13 market-based indicators, we do have the put-call volume ratio there, which is more related to ups and downs. Of course, when we have those days over the SMA 100, the gap over the SMA 100, the MACD gap, which I had mentioned. But the volume itself, looking at put-call volume ratio across the market as a whole, it's not taking into account if it's a bearish or bullish day, because that kind of helps indicate it for us as well. Do show the number of SPX days up, but there's no direct volume relation in the 13 broad-based indicators as far as just SPY goes. Okay, so that's where we were. That's what I was thinking about with that as well. But I can tell you, it's not taking into account up or down day. If there's a volume spike or a big change in the put-call volume ratio, that's going to affect the put-call volume ratio across the market. This is not just for SPY. This is across the entire market. Okay. And this is going to lead me right into Jesus' question. He says, hello, on the market sentiment tool, there's an SPX RSI. Can you go over this? Okay, so the RSI, the Relative Strength Index. Let's go back to our chart very quickly. And I'm going to replace MACD with RSI for a better view. All right, now, there we go. The RSI is a 14-day trending indicator, Jesus, and what it leads to is that a common thought is that when the RSI is above 80, that is some people say 70. I think Ernie prefers to use 80. I tend to too. But when the RSI is above 80, that is a bearish indicator, meaning the relative strength, 14 days in a row of buying strength, usually precipitates a decline. On the same vein, an RSI of 30 or 20 is usually a bullish value, that when the RSI hits that low, it usually is expected to go back up in price. I don't particularly use this one too much in my analysis, but that's what that market sentiment indicator is looking at. It's looking at the value of the RSI for SPX, of course. SPX only. I'm looking at SPY, but it's just easier to see the numbers here and not be in the 3000s, just look in the hundreds. But the scale takes care of that for us. But I'm showing it here, of course, because even though we're looking at the SPX RSI, it's very similar to what you'd see in SPY. Now, this is let's go into here. Now, this might be a very confusing graph at first. A lot of values, a lot of numbers. This is going back. I can go to all. And this is going back to 2009. And the blue is showing you the trend, showing you the exact price of SPX from, back here in 2008, but really from January of 2009 to where we are now. I mean, 1,000 if you caught the low to almost, 350, 359 if you caught the high. So 10, 11 years of trading, if you would put $1 million in here, you'd be looking pretty good. But in any case, the red line, I know it's very confusing, but the up and down red line is showing us the RSI levels. Those exact numbers, Jesus, we were just looking at. Is the RSI at 10? Is the RSI at 20? Is the RSI at 30? I want to go back to this big dip in February. So to do that again, I'm going to click on the scrubber here. We're going to highlight it, and I'm going to navigate into a closer view. Here we go. So what am I looking at here? I know it's kind of close, but here is February when we were up near that 32, 30, it was 33, 39, okay, up in February. And where is our RSI? Okay, it was in the 70 to 80 range, peaked up here at 90, back around mid to late December of 2019. Okay, so that it started to pull off after that, but we're still looking at a small movement here. But here we are at the peak, we're above 70, and with that sell-off, the RSI dropped down to that 20 range. We went to that strong bullish buy, and you see the RSI start to climb as this starts to move up as well. It's a 14-day trend, so you're starting to see it move up prior to that because the sell-off here was getting less than it was the prior 14 days. The decline was less. The RSI started to climb up off of that bottom and move back up. So it's a 14-day, I don't want to say lagging indicator in that case, but we're going into that as well. Okay. Sam adds, oh no, that's a different topic, and Sam had just commented MACD as well. William adds a comment here. So that's the RSI of the SPX. That's what we're looking at there, is that it's believed that a 30 to 20 level usually means the market's going to recover and move back up. If you're at 70, I really say 80 or above, that's usually an indicator that the market's going to pull back down. So over this 11-year period, what Ernie did, and this is how he did it for all of these different ones, all the different 13 broad-based indicators, is he looked at the distribution. And this is very common from what I just said. We would expect to see this graph. This is our distribution of all the occurrences when the RSI was really below 30 over that time frame. It's very small, isn't it? Very small distribution. How many times is it above, let's say, 85? It's a very small portion of the distribution. And I'm just going to draw a little jack-o'-lantern in here since we're getting closer to Halloween. No, that looks more like a little kind of blob monster there. In any case, over the 11-year period, that's what we've seen. Very infrequently do we see an RSI go down to 10, go down to 15, go down to 5. Very infrequently do we see an RSI go up to 90, 92, 93. Sometimes it does go above 80, but that's usually when it's going to revert back, which means what? That the market's going to decline and ease off. And when it's down here, what does that mean? It means the market's likely to move up. We're going to go back to see relative strength, back to the median as well. On this note, Sam says when the market is at an RSI of 80, use the 3 and D8 EMA cross down to sell or hedge your stocks. With puts 3 EMA cross the 8 EMA downside, you cannot go wrong in those situations. Okay, so he's looking to see when you're at the bottom, what would I look to do? I'd probably consider selling naked puts, doing bull put credit spreads, covered calls, and so forth. Okay. All right. And William says, adding to our discussion on the volume, he says, wouldn't you say that volume shows conviction, either buying or selling? Why would the MSI not use the same sort of volume indicator, i.e., market sentiment indicator, OBV, Twigs, etc., to factor in bullish or bearish? And I can't answer that. What I mean by that, William, is when this was done, when Ernie put this tool together, which has worked well for me, by the way, from catching the managements of the different histories when they triggered. I'm going to talk about that, and I got to talk about that in a moment too. As apology to Frank if he's here, and an apology to I believe it was Octavio. I can't remember that we had this discussion with last week. Ernie tested about, I want to say it was 45 to 50 different indicators. I don't know if volume was in one. I don't know if the OBV, the Twigs, some sort of volume indicator was in that 45 or 50 he tested when he put the market sentiment together years ago, William. What I do know is that he found that these 13 indicators gave the best signals for a pre-market movement. Not guaranteed, of course, not saying that that movement, when you see a strong buy, is going to happen in 2 days, it's going to happen in 5 days, and it's going to last for 2 weeks. It's not like that. It's giving you a warning sign of potentially managing your position and or entering into new positions. I'll check with him, William, but all I can tell you is that if he did test those, they were not as good, and not as good indicators of what Ernie saw with these others as well. But I'll try to check to see what he did, because off the top of my head, I cannot remember them, all of them. One of his favorites was the trend. Real quick, while we're here on the market sentiment, we're looking at that graph. I owe many of you an apology. 3 weeks ago, we were going over the market sentiment tool. We were talking about using our little scrubber there to highlight and select the areas and so forth to see when the buyish, recent bullish buys occurred and the sells occurred and so forth. Frank had sent a comment and he says, how are you selecting that whole history? And I thought he just meant this little scrubber. How was I going back for 3 days instead of the full view that was back for 3 years? And then there was another comment that came in last week saying that I'm not seeing all of the content that you're seeing. And I said, okay, well, you just have to use the scrubber to go back. This was an error. It was a complete oblivious on my part, but it was a sort of subtle error that happened in the programming. What had happened to many of you, to Frank, to the coaching session I had earlier this week, and to the other gentleman who mentioned it last week, no one was seeing the red and green lines if you're on the end of day service or the 20-minute delayed subscription service. I didn't know that because I look at my webinar account, which is a trial account, so it has a history flag. So I'm able to see the range of history, whether it's 3 months or whether it's 3 years. This is a special one. We want to illustrate more of the history. So we have this special trial turned on so I can see the 3 years of history here because we discussed the market sentiment tool a lot. But you guys were only seeing the blue line and you were only seeing it for 10 days. I didn't know that until I had the coaching session on Monday, or yesterday actually, and I logged into the customer's account and I saw only a blue line. And it was funny. It wasn't funny to me at all. But what was strange to me is, let me close this and reopen it, is as I was talking to the customer, he was on a 20-minute delayed subscriber. He had said, oh, so wait, we're in a very bearish signal. And why he said that is this was only looking at 10 days of history. It's not even that far. Sometimes that's about where I wanted to be. What was occurring is the graph was skewed. So he was showing the SPY price. This side was skewed a little bit more. It was, showing 20-point increments, instead of 100 or 200. So he had this blue line chart that was doing this over the last 10 days, going essentially from, where we were here up at about, whatever it was, 345 at that point down to where we were here at 330 or 325. So it skewed this way. And he said, oh, so we're in a very bearish sell. See, the gradients are gone. The red and blue gradients are gone on the side. And I said, no, that's just showing you the price of SPX, We're not in a bearish sell. But now I saw immediately why there was so much confusion. I would almost think that too, if I only saw the blue line that went like this, that it was telling me we're in a bearish signal and we're at this price. And that's not what it was at all. So what we've done now is, even if you're on a 20-minute delayed or end of day data subscriber and you don't have access to the history, you're still seeing now about 3 months of history. We've changed it and we've put it up to about 3 months of history on the market sentiment graph. And now correctly, you'll be seeing the red and the green lines of when the last indicators hit the very bullish buy. So over here, this equates to what we're looking at on the chart here with the green and red. And this is just looking at our blue line for the price of SPX. And here's our sell warning. So now you'll see more of that. You'll be able to scroll a little bit more over those 3-month periods. So that was taken care of. That was my fault. So I apologize to Frank. I apologize to Ahmad, I think it was as well. But that's taken care of now. So it should appear better for all of you.